In poker, there's a saying that separates the amateurs from the professionals. It goes like this: you don't win by playing more hands. You win by folding more hands. The amateur sits down at the table and wants action. Every hand looks playable. Every pot looks winnable. They throw chips in again and again, convinced that volume is the path to victory. And they lose. Consistently, predictably, inevitably. The professional is different. The professional folds. Again and again and again. They wait. They watch. They let hand after hand go by without playing. And then, when the right cards come, when the situation is perfect, they strike. Trading is no different. And most traders are playing every hand. Today, I want to teach you the art of folding, the discipline of saying no, the power of passing on trades that look good but aren't great. Because here's the truth nobody wants to accept. Wealth in trading isn't built by the trades you take. It's built by the trades you don't take. Let me paint a picture. You sit down at your trading station. The market is moving. Charts are flickering. Candles are forming. And everywhere you look, you see potential. That could be a breakout. That could be a reversal. That could be the start of a trend. Every movement whispers opportunity in your ear. And so you trade. You enter one position, then another. You're active. You're engaged. You're in the game. At the end of the day, you've taken 12 trades. Some won, some lost. You're roughly break even, maybe down slightly when you factor in commissions. And you think to yourself, the opportunities just didn't work out today. But here's the reality. Out of those 12 trades, how many were genuinely your setup? How many met every single criterion of your strategy? How many were truly excellent opportunities? If you're honest with yourself, maybe 2 or 3. The rest were mediocre at best. They were trades you took because they looked okay, because you wanted to be in the market, because folding felt too passive. Those 9 or 10 marginal trades? That's where your money went, not to the market, to your inability to fold. Here's what I've learned after years in this game. The best traders I know take the fewest trades. Not because they see fewer opportunities, they actually see more. Their trained eyes catch setups everywhere. But they've learned something that most never learn. Seeing an opportunity is not the same as taking an opportunity, and the discipline to distinguish between the two is worth more than any strategy. Let me tell you about a concept I call setup erosion. Every deviation from your ideal setup erodes your edge. Your perfect setup might win 60% of the time, but a setup that's missing one element, maybe it wins 52%. Missing 2 elements, maybe 48%. Those differences seem small, but over hundreds of trades, they're the difference between a growing account and a shrinking one. When you take a trade that's close enough, you're not taking a slightly worse version of your setup. You're taking a completely different trade with completely different odds, and those odds might not be in your favor. Yet this is exactly what most traders do all day, every day. They see something that resembles their setup. They squint a little, convince themselves it's good enough, and they enter. They're not trading their edge. They're trading their impatience. Think about it this way. Imagine you're a restaurant critic. Your job is to find 5-star meals. You have unlimited time and unlimited options. Would you settle for a 3-star meal because it was available right now? Would you eat at a mediocre restaurant because you were hungry in the moment? Of course not. You'd wait for the 5-star experience, because that's your standard. That's what you're looking for. Anything less is a waste of your time and attention. In trading, your setup is your 5-star meal, and the market offers you 3-star meals constantly. All day long, it presents mediocre opportunities and invites you to settle. The amateurs eat. The professionals fold. I want to address the psychology of why folding is so hard, Because it's not just about discipline. There's something deeper going on. When you fold a hand, when you pass on a trade, you're essentially choosing inaction over action. And our brains are wired to feel like inaction is loss. There's a psychological phenomenon called action bias. Studies have shown that people prefer to do something, even if doing nothing would lead to better outcomes. We feel more responsible for bad outcomes that result from inaction than from action, even when the inaction was the correct choice. In trading, this shows up as the constant compulsion to be in a position. The fear that standing aside is the same as falling behind. The belief that you need to be doing something to be making progress. This is a lie your brain tells you, and it's one of the most expensive lies in trading. Let me give you a different frame. Every trade you pass on is money saved. Every weak setup you fold is capital preserved. Every moment of patience is a deposit in your account, even if no dollars actually move. Think about it mathematically. If a marginal trade has a negative expected value, even slightly negative, then not taking it is equivalent to making money. You've avoided a loss. That's profit in the truest sense. Folding isn't passive. Folding is an active decision to protect your capital for opportunities that deserve it. The great traders understand something that most never grasp. Cash is a position. Being flat is not being out of the market. It's being in the most flexible, most protected position possible. When you're in cash, you have unlimited options. You can strike anywhere, anytime. You have no risk, no exposure, no anxiety about what the market might do. When you're in a trade, especially a marginal one, you've committed. Your capital is locked up. Your attention is consumed. Your stress is elevated. And for what? For a setup that wasn't even that good? The professional spends most of their time in cash. The amateur spends most of their time in positions, and that difference explains their results. Let me share a framework that helps with folding. I call it the Hell Yes test. Before any trade, ask yourself one simple question. Is this a hell yes? Not a maybe, not a probably, not a looks okay. Is it a hell yes? If you have to convince yourself, if you're rationalizing, if there's hesitation, that's not a hell yes. That's a fold. Hell yes trades are obvious. They jump off the screen. Every element aligns. You don't have to squint or make excuses. You see it and you know. Those are the only trades worth taking. Everything else is a fold. Most traders take trades when they're at probably or even maybe. They set their bar so low that almost anything qualifies, and then they wonder why their results are inconsistent. Raise your bar. Make hell yes your minimum standard, and watch how many trades you suddenly pass on. That's the folding discipline I'm talking about. Here's something practical. Keep a past trades journal alongside your regular trading journal. Every time you see a setup that tempts you, but you choose not to take it, write it down. Note the time, the setup, why you passed, and what happened afterward. Over time, this journal becomes incredibly valuable. You'll see patterns. You'll notice that most of the trades you passed on would have lost money. You'll build evidence that folding works. This evidence becomes psychological armor. When the next marginal setup appears and you feel the pull to enter, you can remind yourself of all the times folding was the right choice. Your journal proves that patience pays, and proof is what your brain needs when the temptation strikes. Let me talk about another dimension of folding. Folding when you're already in a trade. Folding isn't just about not entering. It's also about exiting when you should, cutting losses when your thesis is invalidated, not holding on hoping for a turnaround that isn't coming. Many traders can pass on weak setups, but they can't fold a losing position. Their ego gets involved. They don't want to admit they were wrong. They wait and hope and pray, and they watch small losses become account-destroying disasters. The ability to fold a losing hand is just as important as the ability to not play a weak hand in the first place. Both require the same discipline. Both require the ability to accept short-term pain for long-term gain. Here's a truth that might sting. Every big loss started as a small loss. Every account blow-up had a moment where the trader could have folded and didn't. They held. They hoped. They added to the loser. They refused to accept the reality that the trade wasn't working. And by the time they finally exited, the damage was catastrophic. Folding a loser hurts. It feels like failure. It feels like admitting you were wrong. But it's the most important skill you can develop as a trader. Small losses are the cost of doing business. Big losses are the result of not folding. Professional poker players know this instinctively. They fold pocket kings when the board shows danger. They fold strong hands when the action tells them they're beat. They don't fall in love with their cards. Can you do the same with your trades? Can you fold a position you were excited about when the evidence says it's not working? Can you accept a small loss to prevent a large one? That's the discipline that separates survivors from casualties. I want to address something you might be feeling. This talk of folding, of waiting, of passing on trades. It might feel like I'm telling you not to trade at all. That's not what I'm saying. I'm saying trade less, not never. I'm saying be selective, not passive. I'm saying fold the weak hands so you can bet big on the strong ones. When you fold more often, when you save your capital and your energy for the best setups, you can be more aggressive when those setups appear. You can size up. You can hold longer. You can let winners run without the anxiety of a dozen other positions draining your attention. The amateur takes 12 trades and wins a little on each winner. The professional takes 3 trades and wins big on each winner. Same amount of time, same market, completely different results. Folding is what makes the big wins possible. It's what preserves the capital and the clarity to capitalize when the real opportunities show up. Let me leave you with this image. Picture 2 traders at the end of the year. Trader A took 800 trades. He was active every day. He captured lots of small moves. But the commissions added up. The losing trades added up. The mediocre trades broke even. After all that activity, he's up maybe 5%. Trader B took 120 trades. He folded constantly. Days went by without a single position, but when he traded, it was perfect setups only. His win rate was higher. His winners were bigger. His losses were smaller. After far less activity, he's up 45%. Same market, same year, same hours spent watching charts. Completely different results. The difference? Trader B mastered the art of folding. Most traders will never learn this. They'll keep thinking that more activity means more opportunity. They'll keep playing every hand. They'll keep bleeding out to commissions and mediocre trades. But you don't have to be most traders. You can be different. You can develop the discipline to fold. It starts today. The next time you see a trade that looks okay but not great, the next time you feel the pull to enter something marginal, the next time your finger hovers over that buy button, fold. Just fold. Trust that better opportunities will come. Trust that your capital is better saved. Trust that doing nothing right now is the most profitable thing you can do. The market will always be there. The setups will always come. But your capital is finite. Your energy is finite. Your discipline is finite. Spend them wisely. Spend them on 5-star opportunities. Fold everything else. That's the edge. That's the secret. That's how professionals actually win. Master the art of folding, and you'll master trading itself.